Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. It is Thursday, January 20th. Michael Boutros with you on the horn. Good to be with you guys this morning to wrap up the week. So we have seen some dollar strength, albeit not really materializing as quickly as we would like. But we are seeing a little bit of a rebound here. So we got a lot of things to cover before we wrap up the week. We'll take a look at Euro, dollar yen, SPX. A quick look at some of the requests I got here in the room. I think it was you, Marcin. Kiwi Cats and Sterling Swiss. Interesting pairs. I don't usually look, but we took a look at that earlier in the week. Obviously, DXY, dollar CAD, Kiwi dollar, gold with a big move here. And we're going to wrap it up with a quick look at what's been going on with the British pound. As always, any questions or trade setups, feel free to throw them on the message board at any time. A quick look at where we started off. So here's the DXY as it looked like on the 17th. Here's the weekly chart side by side. We were opening up the week essentially right near that, October 2017 swing high. The level was right here, around 95.15. Nice little pivot. You saw last week that the wick actually grounded out right into that key support, right into that longer term multi-year slope in red. We got a little bit of a pop here. Not much to write home about. Just as a disclaimer, I'm still holding a small short left on Euro with a break-even stop. I'm not sure if that's going to give way, but at the end of the day, the pullback was looking for the recovery. That's basically what we're getting. Here's DXY in the daily chart. Now, where it failed, okay, was the thing I was looking at 2 days ago, and that was basically right at the monthly open. So we got that recovery, whipped higher. Again, this is Euro weakness, right? DXY strength. The 38.2 retracement, there's the yearly monthly open, okay, right at 95.67. You can see that we ran just above that, okay, completed a 50% retracement actually, and pulled right back. So the question becomes, was that a break of the monthly opening range, a test of the monthly opening range lows, and we move off? Or was this a larger correction or completion of a correction? Here's what it looks like on the intraday. So the 2-hour chart basically has us pivot right now, 2019 low day close and the 38.2 the advance. So we were looking for a dollar rally this week. We got it. Here's what we look like back on the 17th. We ripped right into that 2022 open, yearly open, and we're basically hovering there now. So where does that leave us heading into the close of the week? There's not much event risk on tap. Okay, we're pretty wrapped up with event risk from the US as far as the week is concerned. Give me 1 sec here. All right. So we're really going to be looking for, sorry about that, for broader dollar price action to move this thing. At the end of the day, near term, if this does pull back, it would need to hold that 618, which comes in right at the weekly lows. So there's your weekly swing low. There's that 2019 low that we were looking at, 95.08 is the 618 of this recent recovery higher. So this is your zone right here. If DXY is going to head higher, that's your near-term bullish inval now. All right, so 90.09, 90.08 into 90.16 is basically what we're looking for as key support, okay? Near-term bullish inval, let's call it, for the DXY. On the upside, 96 is still the level that we talked about on Monday. That's still the level that you would need to breach to at least alleviate some of the downside pressure. At the end of the day, okay, while we are still in this broad uptrend, we're still in this embedded downtrend off the December highs. So that's what we would need to clear to essentially open up a larger rally, invalidate that downtrend off the December high. The yearly open from last year and the 618 drop, that's sort of your bearish inval, but near term, it's all about whether we clear 96 or not. So In the hours, in the days ahead as we head to the close of the week, if you get a pullback, that's key support. Ultimately, we want to see a low ahead of this region for a stretch towards 96. Now, if we take a correspondent look back at the euro, I'm going to jump around here just a little bit today. So last night, or this was the 18th, the update on the euro. Here's what we were looking for. And here's what euro looks like now. All right, so was a break of the weekly opening range. Wasn't the cleanest break, but certainly that move back below the yearly open at 138, at 113.83, excuse me, had me looking lower. You know what I mean? I took a quarter off here. I went break even on the rest, and here's the pullback. If it does launch, you know, and it gets me to 13.7, I probably can get stopped out again. But at the end of the day, 1, 2, 3, 4, one more 5 leg. Could be a possible wave count for the structure of the decline. If we look at this a little bit farther out, not much to be wanted, not much to be desired, or more to be desired, I want to say. The whole focus was to get a drive into 13. That's what I was trying to go for. It's the basic 618 longer term that we've been looking at. It's your monthly and yearly at this point, close lows, right? So was looking for a stretch there. Not sure we get it. If I get stopped out on break even on this, we'll just look to reassert here near 114 if we get up there. That's the weekly open. It's a 618 at the drop, nice confluence zone. But all things held constant, still hoping we get that final stretch towards the 113 handle. Not our top trade, not something that's going to be on sort of reserve here for a trigger trade that we're going to take in the immediate term. But into the end of the week, would love to see that dump towards 113. So that's what I'm looking at with euro. No change to any of those levels. The only thing I've added on this is a retracement of the decline. So this drop here gives you this retracement. Again, it matches up really well with levels we're looking at already. The 2022 open, and again, bearish inval at the weekly opening range, or at the weekly open rather, I should say. So that is euro and DXY, both doing a little dance here, okay? You wouldn't be surprised if we get recovery towards 1380, but at the end of the day, the whole point is, do we get the drive towards 13 before broader resumption? Here's euro. I'm going a little backwards here, but just to give you a picture on the weekly charts of where we're coming off. Remember, 1460 last week was critical. 2019 yearly open, the 236 of last year's decline, major pivot in price, swing highs galore, and the uptrend. So that's still going to be sort of where you would need to break to even think of a larger euro reversal. Till then, again, I think we have to put this one on the watch list for now. Questions on euro or DXY? That's 1 and 2. Okay. Also from that update on Monday night, I wanted to go back really quick and take a look at where we stand here with dollar CAD. It's been a boring week for dollar CAD. I just wanted to highlight where we were in the grand scheme of things. We're still at pretty radical support. All right, remember this. Here's the 786 of the advance from last month's, or excuse me, last October's low. Here's the close lows, or the swing lows rather, from back here. The 52-week moving average is being tested today. We haven't closed below it yet. And here's the 786. So basic uptrend support, nothing fancy, but we've already seen a decline of what, 4% almost off the highs. Not much of any type of recovery, but at the end of the day, 2430 breaks, and this thing could see another accelerated drop. So am I tempted to try to play the rebound? Man, a little bit. Haven't pulled the trigger. Here's what it looks like. You know, if you're playing this last couple of days and fading weakness, you actually might have gotten a couple of scalps. I'll show you the intraday chart in a moment. But just to add further conviction on this zone, 2430 into 2470 extends 2 equal legs off the high. 1, 2, 3. There. 786 off the low. Slope support. It's all right here. It's all right here. So looking for a reaction, there hasn't really been much play in dollar CAD. Here's what it looks like in the intraday chart. It's such a tight, pitiful range. right? And a lot of people were talking about oil rallying and that's going to help dollar CAD. Well, oil's been rallying, dollar CAD hadn't been seeing that fruit. So that corollary move, guys, it's not something prudent that we should just stick with. At the end of the day, the only thing that works here, the only thing that seems like kind of viable is you still have a pretty clean, tidy weekly opening range intact. Here's your weekly open, here's a set a high, you set a low yesterday, and here we are still sitting just above key support. At the end of the day, you need a topside pop, a rally, a close above 25.46 to get this thing going towards the median line in 26.50s. A downside break, like I said, could see things fall apart really quick. Momentum is flatlining on the intraday chart. Momentum is flatlining or a little bit lower here on the daily chart. So hopefully we can't get a catalyst in something here, get this thing moving. But at the end of the day, the levels are pretty on point. Nothing's changed from earlier in the week. Here's what it looked like on the Monday. All right, so we came, probed that high, failed, probed that low, failed, weekly opening range is preserved. Now, I just want to say this, that is the weekly opening range is preserved within the confines of the downtrend. This is the pitchfork we've been following from the December highs, right? I was looking at this earlier today. Look at the median line. Break, resistance, little false break there, but resistance. Again, another false break, but resistance, resistance, resistance. So what that entails, what that suggests is, again, a 24-30 break could see this thing accelerate. I'm flat, humbly, okay? Areas of interest for me is if we get an exhaustion low and pulls back above, that might be a low to fade, or more importantly, the breach above 25.40s would be the breakout. Again, you're looking for 26.40s, excuse me, 26.50s, key resistance into 27 handle. Need some loony clarity to get this thing going, but the levels are unchanged. So that is dollar CAD, number 3. Number 4, a quick look at New Zealand dollar. The levels here just continue to hold. The slope is a little messy. You got a break there that looked like it was going to break back on the 18th, didn't. Got a break there, looked like it was going to break yesterday, didn't. Again, the objective weekly opening range is preserved right at uptrend support. Take a step back and look at this from the longer perspective. Here's Kiwi on the weekly charts. The whole focus since December and into the start of this year was what we do at this support zone at 67, 67.33. It's the objective 2020 early open. That's the 38.2, the 2020 advance, and now marks last year's lows. So until we clear this zone, Kiwi's range. Now, it doesn't mean there's not opportunity for play. It just means that we need to be very mindful of where we are in trend. Here's the daily chart. Hey, man, great seeing the room. Says, sorry, I'm late. No worries. We just covered DXY Euro, and this is dollar CAD. So, or excuse me, dollar CAD. This is Kiwi, number 4. So for Kiwi, it's a very tidy monthly opening range. Here's your monthly open. You set a low right at key support. It's the same key support from the weekly chart. Set resistance right at near-term resistance. That was 2 equal legs off the low from last year. That was a 38.2 retracement of the October decline. That was slope resistance. And that's still key resistance for Kiwi. So at the end of the day, another one very much similar to dollar CAD in that even tighter, the monthly opening range is still preserved. Here's what the scalp looks like. Again, weekly opening range is preserved right at uptrend support. So guys, are you seeing a theme here? Okay, the dollar making its move, right? All of these trades are right at pivots. So DXY rebound came right into resistance. Euro dollar pullback turned right ahead of support. Again, I'm still looking for 113. We'll over an Aussie in a moment. Kiwi, you know, you can't see it as clearly here, but that weekly support zone is absolutely critical. So even on some of these trades, like, yeah, that looked like a decent short yesterday. Really nice momentum failure at 60. You had a pivot or a trigger here in the RSI. Really nice, but I can't get too excited about selling into support. So we need to see some clearing of some of these ranges. We're at the bottom end of the range on some of these trades, specifically dollar CAD, specifically Kiwi dollar. Hopefully we get a kick on some of these moves in the days ahead. That's Kiwi dollar. Oh, what the hell? Let's just go over gold. That was also on that same setup. And Imen's in the room. I know she loves the gold trade. So here's what gold looks like. Man, beautiful breakout. I gave you guys a heads up yesterday on Twitter as the breakout was materializing. Take you back to the previous gold update from the 12th. Man, we've been talking about this trade for quite some time. I'll take you back to the weekly charts, which highlighted since the start of the week, a year rather, we were looking for a break of 1783 into 1829. That was the range for gold. Okay, period, exclamation point, end of paragraph. Now, if we drilled in deeper to the daily charts, the monthly opening range was preserved above 618 retracement of the advance off the December low and a 618 retracement of the decline off the November high. So you had a beautiful range. The yearly open, the monthly open, the July high day close was all at 1829, and that was the level to look for the break. Even the intraday charts had us rallying. Here's the yearly open again, right into that 1830, pull back into trend support, back into 1830, and this is where we stayed for some time. This is from the 12th. This is from last week. This week, we came into the week saying, watch, we got two tests of the resistance. Bullish invalidation now moves up to 1800. We need that breakthrough 1830. If you get it, you're looking for 1850. You're looking for 1861. Okay, 1850, by the way, 1849 to be exact, is the 2021 high week close. Those tend to be important levels for me. All right, here's what gold looks like now. Beautiful play. 1849, I do think you see that in a couple of hours here. That's the 2021 high week close. There's the 1861, excuse me. Geez Louise, thinking too fast. This is two equal legs off the low. So from the advance off the December lows, 1, 2, 3, 1861. Okay, 1861. So here's what the daily chart looks like. What do we always say? When you see these breakouts, you don't want to see a little meander. You want to see an accelerated rip that suggests that there's a lot of stops up there. You're clearing out the weak hands. That's the accelerated approach you want to see. It's exactly what we got. Okay. Questions on go. So near-term support now, yep, near-term support's now 1830. I would bring up bullish invalidation to the weekly open. All right. Now it doesn't really converge on slope. It doesn't give you anything juicy. It's a confluence zone. But from a trading standpoint, just an objective standpoint, if we were to make it back below the weekly open on a breakout like this, that would pretty much nullify, in my humble opinion, the recent breakout. So bring up your bullish inval from 18 like we had last week or at the start of the week up into 1817 at this point. Topside resistance target still 1849 and 1861. Questions on gold? Iman says, I adore gold. Well, I hope you did well on that. That was the breakout we were looking for, guys, since the start of the year. So all things held constant, this is constituting a monthly opening range break. Again, it would suggest that you look for that late month high. Now it's the 20th. We got about a week and a day left in the month from as far as trading perspective. So yeah, I think, clear-cut break. Okay, that is number 5. Number 6, let's take a back look to last night's update. Or excuse me, I didn't give you guys last one. There was a COVID scare here in the house. I do apologize. Thank God all is well, but just had to take care of that. Dollar yen. So the dollar yen trade has been one that I've, again, regrettably missed this year. The rally that we were looking for failure right into the start of the year was a perfect trade. It failed miserably right at resistance. Remember this on the weekly charts. That's the 2015 August swing low. You had the median line for the ascending formation there right into the start of the year. We failed. Automatically, we started looking lower. From the weekly chart, guys, there's not really much to look for here. The only thing I wanted to highlight is last week we did pivot back below that resistance zone at 115, essentially 114.90, 114.55. Many swing highs, the 786 retracement of that high that we made back in late 2016, big level. So all things held constant, you kind of ducked back below resistance on the weekly chart. Not only that, divergence into the rally. Okay, if you look at this from a line chart, here's a higher high. Here's the oscillator making a lower high. So the exhaustive momentum sort of signal is there. We ran into resistance and pulled back from uptrend resistance. It only makes sense for us to see a trend of uptrend support. So maybe a little lower. Okay, that's the weekly chart. Here's dollar yen on the daily. Again, there's the rejection early in the year. Here's a break below the yearly open, the monthly open. Here's a drop into a 618 of the December rally, or this is the late November rally, actually. So we're at support now. You can see that the recovery earlier this week failed right at the yearly open and pulled back. I do think you see another drop lower here in dollar yen. Here's what it looks like on the intraday chart, and here's what it looked like on our last update on dollar yen. So start off the week with a ripperoo. Here's the rally. I was looking for actually a stab into this. I would have liked an actual tag of the 618 or the upper parallel, but you didn't get it. At the end of the day, here's the pullback. 38.2 break, 618 break. This is the weekly open. If this candle closes, and especially into the US Open, guys, today at these levels, that's a break of the weekly opening range. That's a break of the weekly open. That's a break of Fibonacci support. Okay, so in such a scenario, you're basically looking again for another test of uptrend support that doesn't come into like 1380s, 1375. So keep an eye on this dollar yen drop off here. I don't want to chase this at this point. Again, I do think that you look for support at uptrend slope for the broader pitchfork we've been following here. And that's what I got on dollar yen. Any questions on the yen? You do get inflation figures tonight out of Japan. Not major market mover per se. It is rated as a high significant report, but the previous read was like 0.6. So I don't think we're expecting too much of a blip there. Questions on yen? All right, let's get into some nitty gritty stuff here. Here is SPX. So what do I start with here? It looks like we're scratching right ahead of a big support zone. And I'll show you what this looks like from the top down approach. Here's SPX first on the weekly chart. And here are the levels that we've been following with our last update. So the pullback that we materialized, we were looking for that break of uptrend support. Last week we got a test, but it didn't close below. So we still haven't closed below, for a matter of fact. So on the weekly close, we'll be watching this, but the first level of interest on the weekly chart was that 45.35 level. It's the high week close for the advance we made in August of last year. It was the low week close for the drop that we made in November. It was the actual swing low for that December pump. We're there now. We're there now. Now, on the daily charts, two levels of interest, again, 45.55, excuse me, just a little bit higher from that 35 level was the swing high. Remember, this is the close high. So we were looking at that for an initial target, secondary right here. Here's what it'll look like on the intraday. So 45.51, big support down here. 100% extension off the high, gives you 45.13. The December low gives you 45.93, and a 618 gives you a little bit lower. I can't see it on the text there, but I'll show you in real life. Gives you 44.81. So this is huge by my part. Not only does this zone represent this cluster of Fibonacci sequences, my favorite confluences, but like I said, it also covers that high that you made there for that September print, the low for December. It's all stacked right here. So a break of uptrend support. We got the accelerated drop. Maybe a little hiccup here, maybe some back and forth, maybe even a little bit of a recovery, but I'm looking for that drive towards 44.81, 45.13. Here's what it looks like on the intraday charts. And here's what it looked like earlier in the week. So this thing could not have played cleaner, guys. This is exactly what you look for when we look to see to validate these breaks, right? A break below uptrend support, a break below Fibonacci support. Any recoveries, you look for failure right there for the move lower. Here is the break. He dropped into 45.50. Rally failed right there. And here's the move lower. Now, you're seeing divergence into the low. I recognize that. If you're not holding anything here, this is not the time to jump in. If you're holding shorts, this is like, I want to tell you to go break even or better, but at the end of the day, 46.10 is still bearish in Val. That's still key support. So even if we were rallied back in the median line, guys, I wouldn't want to get faked out because, you know, we're still in this formation pretty clean. So all things held constant, I'm looking for a reaction into 44.80, 45.13, this critical zone of support for SPX. Doesn't usually get this kind of clarity. So when you do get it, guys, make sure we're paying attention. Make sure we're paying attention. On all time fronts, SPX couldn't be clearer. All right. Now, there's been a lot of talk and a lot of questions on NASDAQ, and I think I don't see Ty in the room today, but you know, you got me looking at this earlier in the month, and that is also coming into a major area of support I just wanted to highlight. So here's the intraday, but here's the daily, okay? Basic trendline support off the lows from March, 1 touch, 2 touch, 3 touch confirms. You even got a gap below, which closed above. So again, that looked like it never broke. And then here's the break and flush out. A 38.2 retracement of that advance is being tested right into 15,000, 15,024 to be exact. And then you got this pivot, which is the close, which is the swing high from back here in October. That's right in the same zone. So we are looking for a reaction right here. I think this is supposed to be at the high close. I'm sorry, this is supposed to be the high day swing close there. It gives you a little bit deeper, 14,897. So both SPX and NASDAQ are both giving that look that, all right, we're at risk for a recovery for sure, but both of them are tempting just a test of critical support, just a bit lower. Again, here's the intraday chart. That pitchfork has been spot on. You recovered to 50% of the drop from the November highs, failed, and here's the resumptive move lower. Now, the extension of the drop, the 100's already been beat, right? If I'm not mistaken. Yeah, the 100's already been beat. Here's the 1618. So on a break of the downtrend, remember, a break of downtrend support can oftentimes be the sharpest part of the decline. If we drop this, you could see an accelerated drop back towards 14,570s, 14,580s. Not the base case scenario, but that's the risk, right, with a break here. So at the end of the day, I think both of these indexes, at least near term, if we do ground in some support levels, lighten the load, lighten the load. You may see some back and forth on this one. Questions on SPX or NASDAQ? Beautiful breakdowns, beautiful breakdowns. Okay, last from the majors, I just want to go back really quick and give you an update on where we stand on the British pound. Look, here was the last pound update. I told you how I've been basically approaching this. We had a nasty topside breach and failure of the formation that we were looking at. Again, here's the daily chart, right? That pitchfork off the highs, really nice within the interior levels, beautiful rebound off the lower parallel. Like, what's that? You know what I mean? This is classic sterling move. So I've been tracking this one to see what kind of play we get. Here's the intraday chart. It's not the cleanest, but this is what I got. So this is the same pitchfork, guys, that we've been following, right? This same exact pitchfork. Nothing's changed. We went through the highs. We pulled back. You can see the 25% parallel. Support, support, support. The 2021 yearly open. Nice pivot, right? Came down, support for a while, break below, resistance, resistance. That's now resistance, bearish invalidation at the weekly open. So that's how I'm looking to play this one. The ideal scenario was that you would have gotten a deeper cut towards the upper or towards the lower parallels of the uptrend. You didn't quite get it. A breakout of the channel does shift the focus higher. At the end of the day, bearish inval is the weekly open. You need the breach of the weekly open to get resumption in sterling. So one of the ones that seems to be bucking the trend the most, right? And despite some of the dollar strength that we got, sterling's been rather resilient, rather resilient. Here it is on the weekly charts, guys, to give the broader picture here. All right, we came into confluence resistance yesterday. We talked about this. So while we did peak above the downtrend, right? 52-week moving average, low day close, low week close for July. Uptrend resistance was all right here. So right now we're kind of dealing with this messy pullback. Keep your eyes on this. Keep your eyes on this. A breach of the weekly open, I think, is what sets this apart and gives you the go. While below here, you know, I don't want to get too in the if ands though, but if this fails, you still might get a chop into the into the lower parallel of the uptrend. But yeah, sterling. In the event of dollar weakness, this is the one I kind of favor the most. Okay. All right, that is number 7, 8, and 9. Okay, a quick look, Marcin, I believe it was you with these extraneous exotics, but let's take a look. You asked about Kiwi CAD, I believe was the update. Special requests here. We were looking at this, again, this was a fresh look. I don't usually trade these setups, but wanted to take a minute to go through this. It was me. Can you update us on Aussie? And can we have a look at Aussie yen and sterling yen? So Aussie yen, and sterling yen. Okay. Let me get through this real quick first. So the base case scenario, and we brought this to our attention back on Tuesday, was, is this a break, right? The 618 retracement near, what is it, 85.17s. This is the weekly chart, okay? Suggested, well, you're risking a little bit of a dump lower here. The daily chart also mimicking that break. There is that parallel for the current operative slope. We didn't quite make it there, Marcin. It dipped, didn't quite make it for a tag of that slope. So the question is, are you on here for near-term exhaustion? You get a near-term recovery? And I think that might be something to be concerned about because we are seeing that divergence in momentum. This price action is making a little low. At the end of the day, while below the median line, you are still technically bearish. But if we were to recover with a larger bounce, specifically the weekly open is what we had as our bearish inval, that would be sort of the reprieve that you would expect to see for the New Zealand dollar. So you haven't really gotten that yet, okay? This slide lower, this is what the scalp looked like. Here's the weekly open. You got a little bit of a slide lower, but the same type of material thing. Divergence into the low, could see a near-term recovery. You know what I mean? So I wouldn't be too surprised if we go for a check of the weekly open, but Nothing I've been involved in per se this week. Interesting cross here on Kiwi CAD. Not surprising to see this again. Also, when we look at the basic formation and volatility or range that we've seen in dollar CAD in and of itself in Kiwi. So I do think you need to wait for a little bit more clarity here. Bearish invalidation, 85.40. If you get that, that's sort of the breakout zone. On the downside, that slope still comes in right around 84.30s. That hasn't changed. All right. The other one that you wanted to take a look at, Marcin, was sterling Swiss. And that was an interesting trade because it was coming into a big resistance zone on the weekly chart. And here's what sterling Swiss looks like now on the weekly. That level was the 52-week moving average, the 50% retracement of the decline off the highs from last year, and a basic trend line off those highs just a bit higher, right? Here was last week, pump, failure, and do we get a deeper pullback, or is this the extent of it and we go for the rip? Again, you're going to be looking mostly on a very interesting pair. Let me just say that, Marcin, because Swissy is kind of doing its own thing too. But here's Pound Swiss since the start of the week. Not much to write home about. So for me, it's either you want the dump into 23.56, you look for a larger base, or the weekly opening range is preserved. In fact, you're sitting at the weekly open right now. Okay, so look for an immediate range break. If you do pop, again, that's still critical resistance, but might be a decent play. Ideal scenario is that you get a pullback into uptrend support before the resumptive move higher. So no change on that march, and we're still just looking for objective break of the weekly opening range here. All right. Some exotics there for you, number 10 and 11. So let's hit Aussie dollar, number 12. Oh, I do need to hit the crypto block real quick. We're at big support. If there's going to be a buying opportunity in the near term for Bitcoin or Ethereum, more importantly, I think this is the spot. But before we get there, here's Aussie. So from the start, I guess I haven't given you guys an Aussie update in some time. Here's our last Aussie update. It was on the 12th. Okay. This was the breakout. Remember last week, breakout of the near-term uptrend. We were looking for that rally. Failed at that 618 extension. So we never quite made it to the 618 retracement. Here was the failure that we got, and then the pullback. I just want to take you to the weekly charts first. Okay. Because this is why Aussie, for me, while usually my favorite pair to trade, I haven't really been doing much with it. It's because of this. So on the weekly charts, guys, we're like mid-range. The first support level that comes on the weekly charts, the 618, that's at 71. The first resistance level that comes up beyond the yearly open is at 73.80, 74. And it's not like Kiwi, right? Kiwi was governed by support and resistance into the start of the week, of the year, of the month. Aussie's just not in that same boat. Okay, even a 38.2 is way up here still. So I do think if you get dollar weakness, this is one where I would like to see the recovery stretch towards that 74 handle before making any kinds of major trend moves from there. But here's the daily chart. Monthly opening range is preserved. The uptrend, right, that we were looking at into the start of the year, just taking these two lows. You got a third test there. Take it to the top, nice symmetry there, test, 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 test. It's a range, guys. You're now approaching the yearly open, which comes in at 72.70s right here. So it's a range. It's a range any way you slice it. So here's what I've been looking at. Early in the week on the decline, I want to see if that held at 71.70 because that was a 786 of the advance. If this slope had any merit, the median line was there as well. Again, the channel support that we were watching there. Nice hold. Looks like a break of the weekly opening range highs. And that's why I think you're running near resistance at the upper parallel here at 72.60. So I don't have a move on this here. A break of the weekly opening range does shift the focus higher, but guys, we're still in the downtrend, so I don't have a play. If we fail, if US markets open, you get a pump fake here and then it closes the Europe back below, that might be a decent fade position. That might be a decent fade position. Again, I'd be looking for 72 and below. But this would need to hold basically into the open of US trade today. All right, margins, that's sort of the base case scenario for where we are in Aussie. Now, if we take a look at some of the crosses, Aussie yen, I would expect to see under pressure, typically a very sensitive, risk-sensitive pair. Obviously, you've been seeing markets sell off, so wouldn't be too surprised to see this travel lower. Now, you haven't gotten much as far as downdraft is concerned, okay? Here's the start of the year, failure at resistance, pullback, and we've been sitting at a 38.2, basically the June lows, really tighty range. So nothing here is kind of screaming out at me to do anything just yet. If we are heading lower, this recovery, like I said, should find resistance near that parallel. A downside break, I would love to see a run on 81. 618 converges on slope later next week. But don't know if we're there yet. Also, let me see what the extension looks like here. Bear with me one sec, margin. Interesting. Okay. Okay. Wouldn't stress that 81.70, but actually that's where I think you'd see the accelerated break if you get it. So 81 key support down by 80.50 is going to be critical. There it is. Again, taking a step back, being as objective as we can. Marching, this is the 4-hour chart. Man, it's the cleanest weekly opening range you got on set so far this week, I think. Okay. All else fails, get as objective as you can. Get as objective as you can. Look at price action since the start of the week. We are completely range bound. Need to see that break to get things going. Pound yen, expect to see a little bit of a different type of grind, but the same thing right at support. I haven't looked at this in a while. Let's take a step back and see where we are. Off resistance, see the weekly charts. This thing is ugly. So you can basically see that we failed at 2018 highs, more or less. You got 2 daily closes above, but it wasn't by much, right? So I'm neutral here. Man, this is the Widowmaker, so I don't want to try to fight pound strength per se, but hey, you're at resistance. Now, Martin, if dollar yen starts to move lower, right, and you start to get some of that yen strength, I don't think that's propagated mostly by yen strength as to a degree of which you would see all the yen crosses turn over. I do think you would see a prompt of a break of Aussie yen, maybe, but pound yen is going to be your toughest call because the pound is still going to be, relatively speaking, one of the strongest. That's kind of holding its own. So I just don't see the prompt here to try to play the short just yet. Let's see if we can get some clarity to this formation. So I'm going to scratch this pitchfork we've been following. Looks like it still might have some merit, but let me peep this real quick. Nope. It's too early to assume that we've made a high. It's too early, but look, if that high holds, If the 2018 high holds 156.60, 53, you look where slope converges on it, 46 and change. Too early. Euro CAD and pound CAD if you have time. We do have some time. Let's take a look at Euro CAD. Obviously, I haven't updated these charts in months, March, and I don't really track these on a regular basis, but let's take a look. This is the daily chart. Oof. Euro CAD. So I can tell you that 100% extension off the highs from 2018 and 2020 gives you 141 proper. That's pretty big. That's mark some divergence. So I'd be watching the downside here. This actually might be a decent rebound trade. Okay, actually, let me just see what this looks like real quick. And a lot of times, if you crank it to the original slope, so just match up that resistance level, sometimes they give you some guidance here, and that would put the median line right at that 2015 low, like here. Yeah, I mean, it's a drop off. On a trade like this, it's basically all hands on deck as far as the weekly open is concerned, needs to be resistance. So anything on the recovery standpoint, that would need to hold. I know it doesn't give you much help here, but watch these levels. It's a December low right there, near-term resistance. Near-term resistance, near-term support, key support. That's Euro CAD. Okay. And the other thing you wanted to look at was pound CAD, was it? Here's what sterling CAD looks like. Let's check this thing out. Okay, so that's covering the entire expansion from the 2019 advance. The 618, you've seen two drags into there. I don't know if I want to work with this. Let's just see what it looks like. Yeah. It's a tough call on this. What are you looking to do with this margin? You know, all things held constant, looks like this pullback should be corrective, in which case ultimately you'd be looking for this thing to settle, sort of the base. But what I don't like is you're essentially looking at the two strong ones, right? Yeah, CAD is maybe outpacing this. If you look at dollar CAD is holding right at the lows. Sterling had a little bit more of a drop this week before bounding, but you're kind of choosing like the biggest loser. She's not the cleanest. Okay. Areas of support to be focused on before you get the next leg lower. That's the zone you need to clear. 69.15 to 69.75. Oof. Look at that. All right. Bearish inval. Near term. That's resistance. Your weekly open is just higher. What's this line? Forget this line. Watch this. Yep. Key resistance. All right. Watch this. Watch these two zones. That's going to be your tell. Is the clearing of one of these sides. Marcin, does that help? Put a little flavor on it. He says a lot. Hey, more than welcome, man. More than welcome. All right. Okay, EuroCAD and PoundCAD. Add them to the list. Any other questions or trade setups? Crypto. All right. This is do or die. Okay. Here's Bitcoin. I told you guys last week I bought some on the approach into this September low day close. I did, take another dip yesterday, and just picking up here, just fishing. Okay. Look, like I said, this is a do or die. This is not necessarily a trade, but more so just trying to catch, some decent entries to dollar cost average. We talked about the September low day close. On the near term chart, again, we talked about the fact that the 618, the 100 off the high, real near term, just in the January range here, gave us 41, 150, 41, 430. And that's basically what I was looking for support yesterday. So once we got that slip and that rebound rather, I think it's, something to be paying attention to. At the end of the day, if we break the median line, here's the intraday formation, guys, and no one believes that this is the same formation we've been following since last year. I haven't changed anything. This is the October, November highs, the same exact pitchfork, right? And everyone's, oh, it's Bitcoin. It's been so sporadic. It's so crazy. No. It's actually been pretty tidy. It's actually been a pretty, what's the word I want to say? It's on the tip of my tongue, but I can't find it. But the decline has been rather clean within the formation that we're looking at. This was the low that we were attempting, September low day close. The September low was actually there. So the low day close is what we want to see on a close basis, but the actual low was almost tip for tip. Now remember, when we got that low, we talked about the possibility or the fact, right, that we were seeing a non-confirmation low in related assets. That's something we tend to pay attention to a lot. It can be very indicative at market turns, market exhaustion, near-term reversals. So here's Ethereum, which is another one that I like, right? Ethereum drove it home a little bit less. Here's your September low day close. Here's the September low. So on Ethereum, it bottomed out at an even better spot. 2 equal legs off the high, 618 off the low. It's exactly where we bottomed out, 29.20 to 29.58. So you're seeing a non-confirmation low in Bitcoin and Ethereum. Now, again, this is not a mature market, right? I wouldn't treat this the same I would as a non-confirmation in Aussie dollar and Kiwi dollar, but it's something to pay attention to, okay? And in fact, it looks like it's working out. So at the end of the day, I need to see a breach of the median line here. This line converges pretty well with basically what we're looking at with last year's high trend line. But I want to see a breach here to sort of open things up. 2 equal legs off the low gets you up into 46,000. Look to reassess there. But this is kind of a support zone. Now, if this gives out, there's really nothing until 37,000 and change, 35 and change. So it's a pretty precipitous drop. It does risk another 11%, by my humble opinion, on the downside if this breaks. So it might be worth a little stab of it. I do think this may broadly track risk. So if stocks continue to fall off, it's going to be tough to sort of get a footing here. So just watch both of these closely. Bitcoin, 44, 46 resistance. This is key support down at 40,596. Ethereum, that's sitting in its Fibonacci support zone, right? That's going to be still key support there. September low day close comes in at 2764 if it breaks. For Ethereum, by the way, the 200-day moving average sits right along with that trend resistance, with that channel resistance, and that's basically right into 3480, 3485. And I haven't done this here, but if this does end up being just a near-term corrective bounce, the 100, woo, look at that, a little bit higher, 3530s into 3480, okay, that 52-week moving average. All right, good questions, good crowd. Love to see you guys, love the excitement. Let me say this, stay nimble into the end of the week here. There's been a lot of stuff going on with some of these trades that sort of stalled a little bit. Namely, I'm talking about some of these sterling crosses and some of the other ones that seemingly just have no momo, right? Dollar CAD, we're still looking for a clearing of the weekly opening range. Some of these trades just kind of got stuck with not much to write home about. Wait for these to clear, and I think we do get sort of that catalyst breakout on some of these that have really been crunching into the lows. So keep an eye on there, stay nimble, and have an awesome weekend, guys. There's really no data of note tomorrow, so just watch that Japanese inflation data coming out later tonight. Best of luck trading. Have an awesome weekend, and I'll see you on Monday morning for the free session on Daily FX. Right back here Tuesday and Thursday on SB. Happy trading, guys. Cheers.